Hey guys and gals, Charlie Wessel with Cordell Capital here. I have Matthew Owens with OCG, and we're going to be doing the presentation today on Cordell Capital Debt Validation Fund. And Matt's going to explain to you guys how it all works with the with the returns and with how we're working with this fund to get the 20% APR returns back to you guys. So, Matthew, with that, take it away, bud.
Thank you so much, sir. Appreciate it very much. So,
Yeah, sure.
my name is Matthew Owens. I'm a California licensed CPA, full-time real estate investor. I've flipped a little bit over 1,000 houses now. We have over 35 million lent out to flippers in different markets around the country, and I've raised a little bit over $150 million for real estate over the last 18 years after quitting my firm and going into real estate. And today, I'm super excited to talk to you about the Cordell Capital Debt Validation Fund because it's a kind of a unique opportunity from a cash flow stream standpoint. I focus on both debt and equity investments like mobile home parks and multifamily and single family and those types of assets, as well as the debt side where we invest in interest rate type stuff where we're lending money to flippers or, against mobile homes, or in this case, against accounts receivable pools to get a great return on our capital and an interest rate on our capital. So today we're going to talk about that as well as what the debt validation fund is doing to help consumers get out of debt and be able to have a social good with this and be able to help a lot of military vets, active duty, pass and as well as past military and also police and firefighters to get discount programs on this debt to be able to help them even further and get out of debt. And really want to focus on them as much as we can to be able to help them get out of debt and pay it forward for our success in real estate and things like that. And always want to add some social good to our investments that we are doing. So just in a nutshell, I'm going to go ahead and give you a quick overview of this so you have a full understanding and an in-depth guide. We also have a full Q&A that if you forget questions or unsure what questions to ask, you can go ahead and look at that Q&A. It's all the questions everybody else has already asked about this specific investment. So you'll get a detailed deep dive understanding of this, which is pretty cool because that's the way you should be investing, doing your homework, reviewing this, making sure you understand every aspect of this type of investment before you invest in anything outside of the norm. So let's talk about this. So what's happening is we are investing in promissory notes secured by pools of short-term accounts receivable contracts. Those contracts have a receivable maturity date of about 24 months, and that's how we actually go get our 20% return. They're paying us on our promissory note as interest. So we're lending the money, we're being the bank, and we're just securing by these accounts receivable contracts that are in place to pay a much higher return than 20%. Our entire investment is over 36 months. It could pay off earlier than that, up to as little as 2 years potentially, but we expect right now to go about 36 months as far as utilizing the capital to buy more and more of these contracts while they pay us on an interest-only promissory note until the balloon payment at the end of a 36-month period. So again, we are lending money to Resolution Processing. They are the processing company that's setting this whole thing up, and they're the ones that own the short-term accounts receivable contracts. And that's what we're collateralizing against with a UCC filing securing our money against those contracts. And we're lending them the money for up to 36 months. And they're rebuying more and more contracts, and we're buying these large pools of accounts receivables, not just one contract or anything, because it decreases our risk by having a big pool of these if you're looking at the historic 80% collection ratio on these pools. And so that's really our collateral, is the accounts receivable contracts in place. And we're paying quarterly at a 20% annual rate of return. So, you're basically making $20,000 a year on every $100,000 investment, which is about $5,000 a quarter in that kind of situation. So just for investing capital, and you're getting interest on your funds. It's for tax purposes. It's basically just like collecting interest. So this investment carries no debt financing. So we're not borrowing any money at all on this. This is strictly equity where we are the bank and someone else is borrowing money from us. The pools of accounts receivable we collateralize via resolution processing through accounts receivable loan agreements. So we basically do a promissory note and loan agreement to resolution processing, and then have a security agreement in place, and then we do a UCC filing against those specific receivables that get put in place, that get purchased and set up by resolution processing in the first place. And we're helping people invalidate 50% or more of their credit card debt on average with regard to the consumer. And so it's a really interesting structure. And we'll talk a little bit about what debt invalidation is and how that's working, and how people are able to wipe people's debt off of their books so they don't owe it anymore to the banks and the collection companies. Just to give you that quick overview, again, I mentioned my real estate and lending experience already earlier. I invest in a ton of different syndications. I also help run a nonprofit organization called For Investors by Investors that teaches financial education and real estate education. I have a degree in economics with an emphasis in accounting, and became a CPA right afterwards. Working for multiple CPA firms doing tax and audit work, and mostly for larger real estate companies that needed that work. Catherine Bell is one of the partners on the fund as well, and she actually focuses quite a bit in the nonprofit space and loves the opportunity because of what we're doing to help military vets and active duty and police and firefighters and those first responders, as well as the fact that she loves fighting the banks and helping people get out of credit card debt. She has a significant amount of real estate experience herself. She mostly focuses on debt investments, because being the bank, as well as on the I'd say buying dirt, mobile home parks, and those types of strategies are her primary focuses that she really likes to focus on and has experience in. And she's really significantly involved in the nonprofit aspect of investing, and focusing on that social good is a big priority for her. So Rick Wang is my chief operating officer, and he's been with me for over 10 years now, helping me with my entire lending business, as well as helping me with my investor relations, helping me with structuring investors' financial plans for them, and really helping them get to the point where they can be truly financially free. Justin Lofty is one of my investment managers as well, helping with all of my investors and helping discuss with them their financial plans. He actually has a significant experience in the military with, special warfare military service, and actually focuses a lot now on the investment side with us. Deborah Smith is with Titan. She's actually one of the partners on the group too. She is filling the role of CFO with Titan with Catherine. Has a significant amount of accounting and real estate experience. Has actually done a lot of development work and things like that, and significantly worked on the back offices with the development side of things with her previous real estate experience. And then Charlie, I'll let you go ahead and discuss your overview here, sir.
Yeah, hey guys, gals. Most of you guys know me. I'm Charlie Wessel, based out of Charleston, South Carolina. I'm the principal of Cordell Capital. We've been around since 2016. We have just around $162 million worth of assets under management that we have brought investor capital to. Here coming up October. Actually, it was last week. October 13th was our 23rd wedding anniversary. So, yeah, I have a 15-year-old son, 11-year-old twin daughters, and, we've always been an entrepreneur here in Charleston, owning several companies, exited some of those companies. And, yeah, so I found this in order to offer these type of investments to people that usually don't, aren't privy to this type of a way to make passive income. So, we really like the debt structure on investments as well as real estate. We have a good bit of both. So anyway, that's me. Back to you, Matt.
It's really cool to be able to structure these things to have that, financial freedom time with your kids. I have a 6-year-old and a 9-year-old, and It's really the driving force in a lot of parents' lives, and to try to have that freedom and that time frame to spend that time with their kids. And that's what's cool, is bringing these different investments to people that they normally would not have access to, whether that's, multifamily or office space, or, short-term rentals, or, whatever strategy there is available. There's cash flow streams and benefits to those that people don't understand. They don't realize you don't have to do all the work yourself. You can rely on operators that actually have done this before, that have a significant experience in these spaces to, protect you and deal with the operational headaches. So it's pretty cool.
Yeah, and I tell you,
So
one of the things that really intrigued me on this was that we are giving a big discount to our military and the
yeah,
first responders out there. I mean, that's, I can really get behind these guys. We do a lot here in the area for our veterans here in Charleston already. So, anyways,
yeah, that's
back
a
to you, Matt.
it's a big passion of mine as well. My dad was a ranger and a sniper in Vietnam, and I actually trained a bunch of Marines from Camp Pendleton for free for 6 months, to help a friend of mine launch a financial education and investment strategy for military, active duty and military vets, to help them create financial freedom in their life through these different strategies, and teaching them real estate strategies and investment strategies. And now it's 500 to 1,000 people typically go to their events now. It's changing a lot of lives. So it's really cool to give back to them on this, and, help them even further. And we just have a story recently of one of our military vets. He signed up, and he's for debt invalidation services, and he is able to, we're actually helping him invalidate over $75,000 worth of credit card debt, and basically take him from a really tough spot financially into being completely financially free, and taking them through the real estate programs and things like that. And we're trying to set up financial education on the back end of this stuff. We do have consumers generally can sign up for this service as well, for debt invalidation services, to help them wipe out their debt. But the military, if we have a QR code that anybody who's watching this can utilize, and we can give that to you, and you can go out and help other vets and active duty and vets, as well as police and firefighters, get out of debt with a major discount on the services for the invalidation process. And we'll explain that in just a moment. So again, these are secured by large pools of these accounts receivables. Our investment term is 36 months. The minimum investment is $50,000. And if you're doing the math at 20% returns for 1 to 3 years, we're paying on a quarterly basis. So on 100 grand, that's 20 grand a year of extra income, or 5 grand per quarter, as far as the monthly payment goes, or as a quarterly payment goes. And the loans are secured by these receivable contracts at 25% of the value of those receivables, and 30% of the collectible value, because like I mentioned, they're approximately 80% collectible across the board historically on these receivable contracts, because of how much benefit they're getting on these actual invalidation services that we'll explain. Okay. So what is debt invalidation? So typically when you're actually in credit card debt, and a bank wants, as you're not paying your bank, the bank will sell off your debt to a collection company for, call it 2 cents on the dollar, and the bank and the collection company wants to make 5 cents on the dollar, and they make a massive profit by doing this on a large scale on all this debt, and they act as collectors, right? And the typically those credit collection companies are not abiding by the Fair Credit Practices Act in their collection practices, which then enables the attorneys to come in and say, hey, creditor, you're breaking the law. Cease and desist. Stop contacting my client. You need to contact me now. And we believe this debt is invalid, and we are going to fight you on this. And they fight them on it. It takes about 24 months to completely invalidate the debt, or 12 to 24 months, depending on the debt and what the creditor has done. And then they're able to invalidate that debt and wipe it off the books of the consumer as if they never owed the debt in the first place. So it actually helps them significantly, because it actually increases their credit, because all those old debts are wiped out. Now, they're not able to do it with 100% of the debt. Normally, when they sign them up, they're looking at all their debt situations before they sign them up, and the legal fees and the contract fees are and costs are set up based on what exact debts they are able to invalidate, and they do all that homework up front before they actually sign up a client for these invalidation services. So they basically come in from marketing companies. The resolution processing does all the homework on them and checks their income, etc., what their monthly payments are, what the status of their accounts are, and points out the specific instances where the credit collection companies may have broken the law, or other ways of getting out of that debt, and strategies to utilize to be able to do so. And then they have the attorneys help with that process to completely invalidate that debt. And the only other options really for those creditors other than debt invalidation that we're doing is they can go through and do a consolidation loan if they can afford the giant interest payment and giant monthly payment that they have to pay to consolidate all their cards into one place. Or they can do a renegotiation and those creditors will take a haircut on how much they're owed, and the payment will be made in a reasonable way based on affordability. But in that case, that stays on that client's credit for 7 years and becomes obviously a big detriment to them for the long term for doing that, and they're still paying a really high interest payment. And normally you're talking about, say $20,000 of credit card debt with $1,500 minimum payments, and they're able to come in and sign them up for an average of a $6,000 legal fee receivable and legal fee and contracts receivable combined. And that's fully paid off at about a $300 monthly payment instead of $1,500 or giant high interest payment type payment, depending on what their minimums are and things like that, and fully paid off in 24 months and being out of debt with no interest. So they're able to take them from this horrible situation with a high interest payment, high loan payment, and giant balances to a much lower balance because they just need to be able to pay for the services that they're getting in the first place, and that gets put as a receivable. As soon as they start making payments, that's when the services start, and we actually don't get allocated those contracts until they've made at least 2 payments on that account, and they have a huge incentive for performance because if they don't pay, then the invalidation services stop and they aren't able to invalidate and fight those creditors, and so the majority of them end up paying on their accounts. So the customer gets put on that payment plan, and by the end of the second year, they are out of debt, and there's typically a historic 80% collection ratio on those accounts after the second payment is made, and the account's in good standing. The cost of those receivables is approximately $1,500, which is where our funds come in to put up the cost of these contracts. And then there's an accounts receivable balance on the back end of approximately $6,000. And when you multiply that on $5 million, that's 3,333 contracts that are put in place. That creates $20 million worth of debt based on a $5 million investment. So there's where the profits come in and the cost to the collateral value associated with these receivables contracts. So just to give you in a nutshell a chart here so you understand what the process is, the marketing partners are coming in and they are marketing for these clients that have been sold off to collection companies. They're in default and getting hounded by the collection companies. And the way the economy is going, we're seeing more and more of this occur, of course, and more, I'll say predatory lending practices and collection practices that are occurring out there by banks and by these collection companies and things like that out there. And so they're going and finding the client for Resolution Partners, and Resolution Partners does all the homework on that account, checking all their accounts, checking their income, seeing what they can afford on the monthly payment back to the attorneys and the processing company. And once they sign them up and they make their first payment, then the marketing partners pay their $1,500 payment on those accounts, and they start the invalidation process involved. And that's when we put up the funds for that $1,500 cost. And so the client signs up for those contracts receivables, typically about $250 is going to the processing company, and another $50 is allocated to legal. The processing company is doing 90% of the work, and the attorneys are doing the other piece of this that's legally required for them to do the invalidation work for those clients and represent the clients. And we're talking about thousands of contracts. So when you see a $50 or a $250 payment, it doesn't look like that and very significant, but when you multiply that by thousands and thousands of contracts, there's a lot of profit on the table, and I'll break that down in just a brief moment. And so once that happens, Cordell Capital Debt Validation Fund is then investing in this UCC filing investing in the contract and putting up the $1,500, and we're doing the UCC filing after they make at least 2 payments on those accounts. And then now they have the money to pay for the interest on those accounts for the $250 that they're receiving from the client in this situation. So, and to be clear, Cordell Capital is investing into the OCG Debt Validation Fund too, so that way you understand they're buying Class A1 shares in that fund. So they're investing into our fund in this situation. So again, $250,000 minimum investment. We've already hit that. We're raising up to $50 million. This fund is Class A1 shares of our fund in place, and investors are getting the 20% return on investment. There's no management fees or upfront cost to investors. So this is all covered upfront, and there's no management fees. So there's true alignment for performance. We make money as general partners as you guys make money and getting interest on your accounts, and after your preferred return of 20% is paid. And it's an estimated 36 months, $50,000 minimums, quarterly payments, again, collateralized by these large pools of accounts receivables with no debt being used as part of our investment strategy. So in a nutshell, marketing partners are looking for clients that are $20,000 plus in credit card debt and in default and sold to collection companies. And then they go identify those customers for the debt resolution services. So they're finding clients that are in need of these types of services, and the resolution processing will pay a $1,500 fee to those marketing partners. And of course, resolution processing is doing the quality control, the financial review prior to acceptance of that particular client. And the marketing partners are typically spending around $1,000 in their marketing costs, and their profits are around $500. So they want to find as many contracts as possible, but we have those safeguards in place to make sure they make at least 2 payments on that account for those marketing partners, or there's a clawback of that $1,500, which is another reason why we, as the investors, get allocated the UCC filing and the collateral after they made at least 2 payments on that account. The customer enters the service contract and starts making payments on that receivables, and then typically they're able to invalidate their debt like 50% typically on their debt. So an average of $6,000 is what they're paying in services receivables for the legal and contract services, and then $1,500 in cost associated with that receivable. The monthly payments are paid over an average of 24 months with an estimated $250 average payment on the account, and with an 80% collection ratio. And so, and then the contract services are done over the next 12 to 24 months to completely invalidate those debts on those accounts. The customer's debt is invalidated, and the debts are removed off of that customer's credit reports while they're invalidated. So doing the math here on $5 million at $1,500 in cost, that's 3,333 contracts at $250 a piece, which is $833,000 a month of monthly payments, when the interest on the $5 million is only $83,000 a month. And so the additional profits, they can actually buy more contracts and increase our collateral involved in this as well, which is super exciting. So it gets more and more secure as we go on, and they buy more contracts with the funds, which is why it's interest only, so they can snowball this into more contracts being purchased. On $5 million, that creates $20 million worth of receivables. That's $16 million collectible. on the account as well. So a very big margin there for investors, and why they're able to pay the 20% interest. Because if you pay 20% interest to investors on 5 million, that's $6 million. That leaves $10 million in profit on the back end there for the processing company and the GPs for their profit margins involved. And so again, 80% collection ratio on those accounts. We're secured at an average of 25% cost to the value of those receivables as well. And then here's what the payment structure looks like on a $100,000 investment, $5,000 quarterly payments for up to 12 different quarters. Again, it could pay off early in this case if they don't need our funds as well. I don't want to force them to pay a high interest rate if they're ready to pay us off on those funds. I'd be happy with, our interest on our funds for a few years, and even up to 3 years is what the contracts state. Here's an example of those receivables with customer IDs, their enrollment dates, the monthly payments, the amount of debt that's enrolled, the program length, the cost of the programs, the legal fees, the service fees breakdowns, their first payment dates, and the purchase price or the cost of that debt specifically as well. You guys can study this. We'll give you guys the examples of these now, and even updated contracts we can provide as well to show you these types of lists. So investors are sharing in shares of the Cordell Capital Debt Validation Fund, which obviously we're providing a huge social benefit here by helping people invalidate their debt and get them out of debt when these collection companies are not abiding by the Fair Credit Practices Act and other legalities. And then we're also creating a great cash flow return for investors in the meantime, secured by these large pools of receivables at 25% of the value of those receivables, which means that we'd have to have a 75% ratio of default in order to even break even on our investments in this strategy. And so it's only for a 36-month term for a promissory note to resolution processing, and we get cash flows at the end of the first full quarter of the investment. So really great structure and strategy, very clean cut and clear to understand about how this investment is working and what our collateral is involved. It's just a promissory note type structure. And, we're also providing this amazing social good for people. We're helping military vets and helping them get out of debt. And again, if anybody wants the QR code, we want to pass this around and get this out there for people so they can share this link with other people and get those discounts for those military members as much as we possibly can. Review the subscription documents. If the next steps, of course, we have a Syndication Pro portal already set up with a special link that Charlie can provide to you. And what happens is you go into that portal, you sign up for an account really quickly. Within like a minute is all it takes. You can set up your investor profile. That takes 1 more minute. Say if you want to invest with your IRA, or if you want to invest with your 401k, or you personally, or in an entity or a trust, you just pick the entity that you want to invest in and put that entity information in. And then you click the button saying invest, and you can see all the subscription documents and ask any questions that you want and designate a specific investment for that investment. You can still ask questions even after you designate and everything, even after you sign documents and all that kind of stuff. You can ask those questions and get clarity on anything that you want. Again, we have that entire Q&A available for you to be able to review all the other questions everybody else has asked. And if you need any help through the Syndication Pro process, let us know. The entire process, start to finish, takes a maximum of like 15 minutes to really get through. We have all the docs already with streamlined in there with everything outlined, so it makes it super easy, almost like an online DocuSign document. Of course, we want you to take a little bit more time, download the subscription agreements and the PPM and the operating agreement, read them, understand them, ask questions about this investment. You shouldn't be investing if you're not going through and understanding what you're investing in and what the documents mean. And we'll actually help you understand any terms or anything in the documents you want to understand. We can give you access to our attorney. We can go through and walk you through those different provisions based on our understanding of those provisions. But you can also get outside legal work as well, or outside help from other operators that have a significant amount of experience, or other investors too. So highly recommend that aspect of things. But it's super simple on this stuff. After you sign the docs, we obviously need to approve you to make sure that we're reviewing everything. It all looks right, everything's set up right, and then you get your wire instructions. You can wire those through. We confirm all wires that come in and verify those with you every time. You get a welcome letter, so you understand the process, and all the K1s, all the distribution history, all your signed documents, everything is right there inside Syndication Pro for you. Looks like a little mini Schwab account once you have multiple diversified investments with us. A lot of investors invest in debt or equity type deals consistently long term. And, Charlie does the same thing with the specific strategies. And it can be really valuable to diversify into multiple asset classes, multiple markets around the country, and, multiple operators and things like that as well. And, we have a 200-point due diligence checklist that we can give to you that Charlie and I have gone over before. It's a great checklist. It's primarily focused on multifamily. At the same time, you can utilize it for any investment you want. Asking the right questions on the operators, do your background checks on us, come call our referrals. There's certain things in there that will help you to be able to be much more comfortable with this investment. And we're excited actually to share with you everything we've learned about our due diligence process through this and help you out through that process too. So if you have any questions, Charlie, all your information, brother.
Yeah, man. Yeah, feel free to reach out. We'll be sending an email out with this recording as well as the link to our portal. So you can view all the docs, ask any questions like Matt said, any questions you guys have at all, please feel free to reach out via email, or you can book a call with me, or I mean, that's my cell phone number right there. You can just give me a call. If I'm available, I'll answer. If I'm not, I'll call you right back. But yeah, thanks so much, Matt. I'm excited about this. I mean, it's a we're doing a good deed. Like we talked about, I think yesterday. These are people that have gone into like financial hardship. I mean, this
Right.
isn't people that are just racking up credit card debt and being like, oh, check this out, I can just get out of it. I mean,
Right.
these there's a lot of people in this country that you know
Especially with
certain
the inflation
certain
that's happened and
policies have
everything. And
effect.
yeah,
Yeah,
food prices
absolutely.
going up, and a lot of people think that it's the credit problems in the country is due to spending, and of course some of it is, but a lot of it has to do with medical hardships and things like that, and food prices doubling and that kind of thing. Right now, wages have not necessarily risen at that level in any way, and they'll probably reduce in the future. And so, how do we fight back against these banks that are doing this to people, which really is very predatory? If you think about getting credit cards when you're in college, or credit cards when you're right out of high school or whatever, offers for free t-shirts for these things,
Yeah.
they're preying on the people that do not have the financial education yet to get them into a cycle of debt. And if we can fight back in any way, shape, or form on that, then it's a great day in my book, especially because I really focus on that financial education aspect, being a CPA, and realizing that it's a big lack out there of that piece. So
Yeah, every college football game we go to, they give out t-shirts for signing up for credit cards
exactly.
for college
Yeah, like
kids. It's ridiculous.
it's just insane. Yeah.
It
So
is. It is. All right, man. Well, thank you so much, guys. We look forward to partnering with you guys on this. And me and Matthew, we partnered together on this to bring this opportunity out to you. And we look forward to all making some money together on it.
awesome. Thanks, everybody.
Thanks, bud.